So to follow up on the dramatic impact that Elon Musk and other individuals have had on the crypto space in terms of announcements, we also see a fairly impactful conference and meeting held in the form of the B Word. So the B Word was a conference between some of the leading figures in Bitcoin, in crypto, and they were there to discuss how institutions can embrace Bitcoin. Here are just some clips. This conference was actually live streamed on YouTube and a couple other different platforms. You can find the entire conference live and is available to watch at any time on YouTube. To introduce some of the members, we see on the top right, this is Cathie Wood from ARK Investments. On the bottom left, Elon Musk from Tesla, and Jack Dorsey from Twitter and Square on the bottom right. So let's talk about the B Word conference. B Word most likely being a reference to Bitcoin. So this was live streamed for all to see on July 21st, 2021. At this time, Bitcoin and the overall crypto market was in an overall downtrend. One would argue a bear market. Prices were deteriorating every single day, week after week, and we saw Bitcoin fall from about 60,000 to lows of maybe about 28,000. This conference featured Cathie Wood, founder and CEO of ARK Investment Firm, Jack Dorsey of Twitter and Square, and Elon Musk of Tesla and SpaceX. Cathie Wood highlighted Bitcoin's fundamental traits regarding inflation versus the unbounded monetary policy the U.S. central banks have adopted. Cathie Wood was actually really intelligent, and to just give a short version of it, she just highlighted the fundamental aspects of Bitcoin, how there's a fixed supply of Bitcoin. It has a strict creation schedule. It can't be forged or manipulated in order to create more, because it is encoded and the network can refute any falsified Bitcoin or any untrue creation of it. Jack Dorsey spoke of upcoming projects in the cryptocurrency space, including Square's upcoming hardware wallet and Blue Sky, which is a decentralized social media platform. And Musk revealed that Tesla and SpaceX both hold Bitcoin in the reserves, and that he personally holds Bitcoin, Ethereum, and Doge. He stated that neither companies nor himself have sold, saying that I pump, but I don't dump. Now, what's interesting about this is it was already presumed that Tesla was still holding. We saw that from the Q2 financial reports, but there was no announcement from SpaceX that SpaceX actually was holding Bitcoin in the reserves. And part of that is because SpaceX was a private company. They're not obligated to report their reserve holdings and their net balances to stockholders like a publicly traded company would have to. And he also personally revealed that not only does he hold Doge, which he was famously known for championing in April and May, even going to the extent of going on Saturday Night Live and even making jokes about it. But he also holds Bitcoin and Ethereum personally. This event could be said to have acted as a catalyst for a revival of the crypto markets from the previous 2-month downtrend. Like we said before, Bitcoin fell from about high of maybe about 62,000 or so, falling to lows of 28,000 or so over the course of 2 months from May, June, and the end of July. We saw from July 21st to August 1st, about a week, a little bit over a week, the price of Bitcoin increased from $29,000 to $42,000, a 44.42% increase in 11 days. It's a fairly dramatic price increase. Let's see what that looks like. So here was the downtrend during July. We see lower lows. Prices are ultimately falling. Transactional volume was going down. And then finally, during this rather bleak period, the B word happened to be scheduled, and where we saw these investors come in and have a fairly intelligent conversation about the future of Bitcoin. And this essentially has acted as a catalyst for the resulting uptrend that we still see today. At the time of the recording, Bitcoin is about $66,000, almost $67,000 per coin, and a large part of that can be attributed to this conference essentially reigniting the flame and reversing this downward momentum to the upside. Here's another example of Bitcoin. This is a Bitcoin daily chart. So focusing on the left side before we get to the right side, here we see the previous all-time highs of Bitcoin. We see these dramatic swings to the downside in May, and this is the result of the news from Elon Musk not accepting Bitcoin anymore, or possibly other factors such as the Chinese government banning Bitcoin mining, and a host of other news events that all seem to have just occurred all at the same time, possibly just all in the same week, propelling the Bitcoin price to extreme lows. This trend would continue for the next 2 months. So we didn't see a overall reverse in this downward momentum until after the B Word conference, and this is essentially where it starts. So for the next 3 months resulting from that, from the end of July up to mid-October, we see a over 121% increase if you were to have bought from the bottom from that particular event all the way to the top to the most recent all-time high of almost $67,000 per Bitcoin. Now moving on to laws and regulation. So cryptocurrency as a whole is still a very new asset class, and as with any emerging market, it can be considered an unregulated market. Each country has a different set of laws and regulation pertaining to cryptocurrency. The increasing popularity of cryptocurrency comes with the threat of regulation from various governing bodies. This can be in the form of taxes, mandated balance reports, or just outright bans. China, in particular, has a long history of regulation regarding cryptocurrency. In 2013, China placed a ban on bank and payment institutional dealings in Bitcoin. This includes using Bitcoin for pricing products, buying and selling Bitcoin, or any other direct or indirect Bitcoin-related services such as trading, registering, settling, or clearing. Specifically, on September 4th, 2017, China completely banned the practice of raising funds for new projects through initial coin offerings, also known as ICOs. Shortly following the ban on ICOs, in 2017, China released new laws banning Chinese-based cryptocurrency trading platforms. Platforms that could have been similar to Coinbase or Kraken. China just completely banned those types of companies that are based in China. Now, these rulings in September 2017 could be interpreted to have affected the price action of Bitcoin in the month of September, where on September 4th, 2017, there was a high of $4,687 per Bitcoin, and we saw a dramatic decrease all the way to September 15th, where the price of Bitcoin was at that time $2,975, which was about a 36.53% decrease. And here's a chart just detailing that. Once again, this is in the month of September in 2017. So this was the most recent bull market before the 2020 and 2021 bull market or bull cycle. So we saw on September 4th, China bans ICOs and prohibits Chinese-based crypto trading platforms. And this happened around on this date. We saw a dramatic decrease, a little bit of a recovery, and then a further decrease to the downside. Now, it's important to consider that China is not the only government body that poses a threat to the price increases and to the overall crypto markets. There's a threat from U.S. government regulation. While the U.S. maintains a generally positive outlook towards cryptocurrency, few regulators have been put into place regarding the asset class. Various government bodies, such as the Department of Justice, the Securities and Exchange Commission, also known as the SEC, the Federal Trade Commission, the FTC, the Internal Revenue Service, the IRS, and the Financial Crimes Enforcement Network, FinCEN, all have differing opinions and definitions regarding cryptocurrencies. And to go even further, different states, such as Texas and New York, have taken it upon themselves to implement regulation, or a lack thereof, regarding cryptocurrencies. So let's talk about New York for a bit, and New York's BIT license. So New York State has implemented a BIT license that gives an official approval from the New York Department of Financial Services, NYDFS, to companies engaged in the following virtual currency activities. This includes virtual currency transmission, storing, holding, or retaining custody or control of virtual currencies on the behalf of others, buying and selling virtual currency as a customer business, providing exchange services as a customer business, controlling, administering, managing, or issuing a virtual currency. And this has gotten to the point where individual investors, virtual currency mining businesses, and merchants accepting virtual currencies as payment for goods are not subject to those regulations, but anyone else trying to create a business that may involve offering custodial services, maybe a wallet services, cold storage solution services, are essentially banned from doing so before applying for this BIT license. Now, some criticisms of this licensing include the extensive documentation that companies must provide, along with the legal fees associated. And essentially, a lot of people argue that this is a deterrence for small startups. Essentially, you need money. It's almost a pay-to-play situation where there's this barrier to entry where small startups, small local businesses can't engage in cryptocurrency due to this licensing. And this is almost a overly restrictive and overly regulated market in New York. And part of that could be because it is considered the financial capital of the country, possibly even arguably the world, where we see Wall Street and other historical banks and financial firms operate already. There's also no guarantee of support from New York banks. So there's no guarantee that, let's say you were to have gotten the license, that the bank will give you a loan because you are licensed, and maybe they'll give a loan out to someone who isn't licensed. There's also no guarantee of enforcement against unlicensed competitors. So even if you have your business and you go through all the effort of compiling information and all the paperwork, finally going through the arduous procedure of getting the license, there's no guarantee that anyone else operating in New York who doesn't have that license, who didn't go through all that trouble, is going to be prevented from doing so. There's also unjustifiable restrictions on global operations, where if you have a global company that's offering possibly crypto trading services, you have to essentially change your platform to accommodate just for New York State and its obligations and its laws. And there's also the unjustifiable division of service for New York State alone. Now, while there are many companies that have fair criticisms of New York's regulations, in November 2019, the New York Department of Financial Services Superintendent Linda Lacewell told Bloomberg News that companies came to realize that they receive the license from us, that means that they have been vetted and that the DFS was willing to say this company is okay to do business and interact with New York companies. She said that reasonable regulation provides a safe place to innovate. And here are some examples of threats of regulation where we see a New York crypto mining bill dies in assembly after passing in the state Senate. Essentially, this was a ban on crypto mining. The people in opposition of crypto mining stated that essentially crypto mining facilities would take over these old coal mining plants and other power plants that were long abandoned and long in disrepair. Essentially, they were taking them and renovating them and using natural gas and possibly coal to power up these crypto mining facilities. Now, there's a lot of opposition against this ban on crypto mining in New York, particularly from unions, especially the electrical workers union, which essentially a ban on crypto mining is a threat to their job security. Because when crypto miners come into play, they need to hire electricians. They need to hire all these union workers to operate and run the facilities. And thankfully, as a result of these threats and the push from the unions, the mining bill did not pass. Here we see some other effects of news where a controversial crypto tax loophole was found its way into the U.S. infrastructure bill, where essentially there would be higher taxes, and this essentially was hidden in the U.S. infrastructure bill. We see several senators and congressmen from both sides of the aisle. So essentially this was a bipartisan movement where these politicians agreed that there should be more clarity to the intent of the cryptocurrency provisions and that the Senate should vote and change these provisions. And here are some examples of these laws where there's certain specifications for digital assets, certain definitions of digital assets, where the term digital asset means any digital representation of value which is recorded on a cryptographically secured distributed ledger or any similar technology as specified by the Secretary. So we even see that in some of the most recent laws and provisions that would impact an entire industry, there's really a vague sense of definition and a vague sense of clarity regarding what a digital asset is and what would operate under that class. So taking in all these ideas, the main idea is that social media, regardless if it's from a politician, a government official, a CEO, or maybe a bank manager, these events, these announcements can all have dramatic impact on the cryptocurrency market or really on any financial market. Here is a nice visual of all these different possible events where we see the Musk event labeled here and the resulting uptrend, Bitcoin breaking 50,000, PayPal moving into Bitcoin and a resulting uptrend to the extreme all-time highs, Morgan Stanley offering Bitcoin assets, Tesla's being available for purchase using Bitcoin. And then we also see downtrends where we see denials to ETFs, we see bans on mining, Tesla and Elon Musk not accepting Bitcoin anymore. So essentially, these news effects work both ways. To follow up on a more recent example of the news, we recently saw in late October the first Bitcoin futures ETF begin trading, where this ETF began to trade and traded over $1 billion in trading volume in one day. There's a lot of hype and a lot of buildup towards this release of the ETF. And here's a chart dictating the resulting impact on Bitcoin's price. So we saw the announcement on October 14th, 2021. Bitcoin was about $56,000 per coin. 5 days later, the ETF would release on the New York Stock Exchange, and we saw a dramatic price increase run up to the all-time high, the current all-time high at the time of the video, of a little over 66,000. So moving on to retail investors and Wall Street bets and GameStop. So retail investments in traditional and crypto markets have essentially surged in 2021 throughout the COVID pandemic. According to Joe McCain, head of executional services at Citadel Securities, retail investors have accounted for as much as 25% of the stock market's activity during 2020, and that, according to their analytics, that was a 15% increase from similar studies the year before in 2019. So there's a dramatic increase, particularly in retail traders, just in the traditional stock markets alone. The popularity of Robinhood, the very commonly used exchange, and the GameStop craze in January 2021 has introduced cryptocurrency to a much wider audience. There's a lot more day-to-day people who may not necessarily be as interested in the technology behind crypto and maybe not necessarily be as financially literate as previous cryptocurrency enthusiasts before 2020 may have been. And this is a result of Robinhood essentially halting trading of GameStop, and those traders being told, hey, you can go trade crypto and invest in crypto in a 24-hour market that's not controlled by anybody. And here are some graphs essentially dictating these analytics. So these are the individual investor shares of U.S. equity trading volume. And we see overall the analytics point that there's a general increase in individual investors or retail investors. Now, finally, we'll wrap up our lesson with a list of recommended social medias that you all may want to consider looking at. There are various news websites such as Decrypt, Cointelegraph, CoinDesk. These are legitimate sources of news that are often vetted and reputable. Certain Twitter accounts to follow, such as BTC Archive, Whale Alert. That one specifically alerts and tweets out when there's large purchases or sales of coins such as Bitcoin. Documenting BTC, Will Clemente III, CZ Byance, and Jacques Mahler, and many more. There's also various Reddit subreddits where you can go to discuss your favorite cryptocurrencies, such as Our Cryptocurrency, Our Crypto Markets, and Our Crypto Technology. And there's also a plethora of YouTubers, but here's a list of some of our favorites, including the Data Dash Report, Coin Bureau, Scott Melker, CoinDesk, Up Only, CoinMarketCap, Anthony Pompliano, and the Decrypt Daily. Now, finally, if you're interested in all of these but don't want to have to bounce around from platform to platform, you can use a news aggregator website called Crypto Panic, which essentially will pull news stories and events, occurrences, announcements into one central hub, regardless of if it happened on Twitter or on a certain news website. Essentially, you'll be able to see all of the crypto happenings in one central location. And here's an example of a tweet, two tweets from a prominent Twitter user called William Clemente III, W. Clemente III. And here's an analysis from him talking about the differences between long-term holders and short-term holders of Bitcoin. And here he's looking at the on-chain analytics, where over the course of time, he sees that these long-term holders are adding more Bitcoin. This is done specifically towards June 10th, on both of these tweets, where long-term holders are buying more. They're buying more at these lower prices. They're adding more Bitcoin to the week before and overall more Bitcoin to the month before, indicating that long-term holders, essentially large purchasers of Bitcoin, were investing more during these lows during June and July, where short-term holders were selling. And we see a difference between the long-term holder accumulation and the short-term holder accumulation, where long-term holders were buying 20,000 Bitcoin on that specific day on June 10th, where short-term holders were selling 15,000. So that's a net change of 5,000 Bitcoin now being held by long-term holders.